So how do you take a price rise? In times of supply chain bottlenecks and material cost inflation, businesses across industries are raising their prices. But there are a lot of businesses out there increasing their prices and still losing money. The problem is simple. Many businesses lose hard-earned revenue because they don't have a well-structured price rise strategy. In this video, I'll be providing some tips on how to take a successful price rise that your customers are unlikely to reject. By the end of this video, you'll know when to take a price rise and how to take a price rise. So when should you take a price rise? Well, when the market moves, or if competitors are offering their prices at a lower or higher rate, you need to keep up and keep track of the market. 2. During times of inflation, when there are rising costs, FX and trading is affected all over the world, it becomes a domino effect among industries and it's time to take a price rise. Number 3. When there is a significant supply shortage and demand is growing, or if there is a shortage in your inventory due to increasing demand. These are signs that it's time to take a price rise. How should you raise prices without losing customers? Well, avoid euphemisms. Softening the blow of a price rise really doesn't help customers feel any better about them. In fact, it only makes them more suspicious. Terms like price updates or adjustments just don't work. Customers can see through this rhetoric. Just call it as it is, a price rise. Be straightforward. Most executives and their teams are quite reluctant to clearly communicate a price rise to their customers, but should they be? A recent study shows that customers interpret the fairness of a price increase as the second most important factor. If customers don't believe your price rises are justified, they won't respond well to it. But turning this around, if they do think your price rises are justified and fair, they will pay the price. Managers don't need to hold off on price rises, they just need to do a better job of calculating and communicating them to their customers. The same old cost-plus methodology with a crude percentage markup across your product portfolio and a templated letter all about you is going to make your customers angry. You want to take a more sophisticated approach to pricing. Consider a price rise from the customer's perspective. Why do they choose your brand? What sets you apart from your competitors? Why do they keep coming back to your company? How do they buy? And why do you win some customers but lose others? In times of significant inflation, spurred by supply chain shortages, fluctuating commodity prices, increasing interest rates, and labour shortages, getting your price rise calculations and communications spot on are critical to protecting profitability and ensuring your customers don't switch. The essence of a good price rise is knowing when to take the price rise, clear communication to customers, and price rise calculations that not only take your costs and your margin targets into consideration, but also the total economic value of your offer to customers.